Welcome to the Foundation for the Study of Cycles. My name is Lars von Thienen, member of the board, and we are talking about cycles every week, every Monday, same time, same place. Let's meet here on the channel. We are live today. So the last Monday of a month, which we now have with the end of January, will be dedicated for sure to also your questions. So please keep in mind, if you have dedicated questions, the last Monday in each month will be a special session, although I will use every chance in a live session to answer your question most. So set that up front. As always, drop me in your questions while I'm here now. Second, what's up for today? What's coming up? So in general, I want to give you a quick update on main market cycles, on the global markets and on crypto, Bitcoin. So just a short update. I think the main cycles have been outlined in the last presentation. So this week we will make a short update to check where these cycles are. So follow the other videos from the past to see the longer picture. Today is a short update on where we are today in these market cycles. That's it for today. Ladies and gentlemen, let's get directly into this topic. So let's jump into our cycle analyzer to review current market cycles. We will begin with the global markets. So we will use the S&P 500 and the Nasdaq first to see where we are. We have heavy downturn, which worked as projected. Now the question is, we have a bounce back during these days, during the last days. Might this be a longer turnaround or a bottom or not? So that's the key question from the market perspective. Let's check the cycles on these global markets here. Let's start with the S&P 500 here. So this is the action we see right here. I will just load just a little bit more data here for our analysis to start the S&P 500 here. Okay, that way, that's I think that's still the same. Yeah, so let's update the analysis here, and let's see, as I explained in past videos, a key cycle to monitor is the cycle with a length of 170 something. This is what I outlined also at the end of last year, and this is where we are in this longer term cycle here, which was also shown in past presentations here. So the cycle with the length of 170 days helped us to nail the top at the end of last year. So we have very well been prepared. And if we look at this picture today, we are still in the topping window, not in the bottoming window, which seems to be projected to be in April. However, we need to keep an eye on more than just one cycle. So therefore, you always need to match different cycle perspective, as I've explained in the other videos here. So that's the general update. So there's no real news in that. So that from the longer term cycle, the downwards moves seems not to be complete. But however, shorter term cycles might allow for an upswing here, but I will not drill down into very short term cycles. So therefore, if you want to update it, for example, you can then use a shorter period. So to anchor it a little bit more early, so that you don't use the full history. So I'm just playing a little bit around here with the data to see if the cycles change. So there's no reason. I would always try to be above 700 bars. So maybe 700 to 800 would be the minimum I would recommend. You can use more history, but that will also impact the analysis here. And this is what I showed. If you use shorter term periods, so the minimum period, this looked like the top was projected in October, where the longer term weekly cycles, by the way, if you remember, the longer term weekly cycles all projected the top around October, November. Where this cycle now, if the cycle, so with the length of 170 before, has moved now into a shorter length period, which could be the case, indicates this could be a short-term bottom here. So we have now two conflicting cycles. So, and this is also the case, what you will often see. So the picture which emerges during the last quarter today is not as clear as that. So the 170-day cycle still projects that there should be the low to show up in April, so not now. While if you just use the current data, there seems to be, it could have morphed into a shorter period where now the bottom is there. So just using the daily analysis on the S&P alone would not give us a final clue here. So we need to put other cycles into the mix here. That's really not helping here. This was often the case, by the way, anyhow, the last year. So to predict just the S&P 500 in its own is careful. So summary on the S&P, we have two cycles which we could use, 170, 150. The 170 would expect the low in April. The 150 would allow a bottom now. So we need to keep an eye on technical indicators and other cycles to confirm that. So therefore, let's switch to the Nasdaq. So the tech index here. So to confirm or to see if we get a different picture using the tech index here. So and similar to what I said just on the S&P. So just using the current past would reveal the peak here at 150. So I'm doing the standard procedure, by the way, which we use here anyhow. So I'm just doing very fast now over the procedure using the clearest peak in the spectrum with a length of 150, which would allow to have a short-term a low here with another swing then into, or a correction now into March, and then maybe another downswing, which maybe the other cycle is shifting along. So this would allow for a correction now and still would allow end of May, April, then the next lower swing here. So in this case, this will be a correction, an upward correction now, which still can move into or can go through the period of February. Somewhere at the end of February, the markets should then turn down again. And maybe then the longer term cycle has shifted a little bit so that in April, May, we will crash down then in a secondary move here. But that's not clear just looking at the pictures. And again, if we add more data on the S&P here, so I will just extend the period used here for our analysis. Let's see how the cycle shifts. Yeah, so but no real big change here in the analysis. So I think we need to load more data here. So adding more data into our analysis, it's shifting. And then you see these two conflicting cycles here then showing up in the spectrum. Yeah, which would allow for an interim low forming here. The S&P still shows us the longer term cycle has not bottomed yet, and the weekly cycles anyhow, there's no change in that. So let's have a quick update to the longer term financial stress index, which is a weekly data series which we use to foresee the possible bottom here. So in general, there's no change in the longer term financial stress index here I'm now using here. So where we had the expected low arriving end of last year, and now with latest data, we would expect financial stress to rise up, which would expect downwards moving markets from the long-term perspective. So reading this cycle here, the longer-term shift has maybe occurred. So we might have seen a much more important top at the end of the December following the long-term cycles. Short-term on the daily cycles, it's not as clear how long the correction, the upward correction now might last. So therefore, we also need to pay attention to technical indicators and short-term periods, which I could not do here, but at least as I see some questions rushing in regards to how can I use it for intraday cycle analysis. and how the cycles perform on short-term analysis. That's more something for the advanced user. So first of all, in order, if you want to do this, you need to upload your own intraday data sets, because we don't provide live intraday real-time data feeds. This is not the major topic of the foundation to provide real-time intraday data feeds. So I would expect you anyhow have intraday data feeds, and then you should export intraday data feeds from whatever platform or data feed you use into comma separated values. So in CSV data file, save it locally on your computer, and then you can upload these data files with our foundation application. Go to My Datasets, which is what everyone out of you can do. Upload new, and then you can upload your own intraday data sets, and then do the same procedure here. So the way how it works is the same as with daily. We just don't provide access to real-time data feeds, because that's not the purpose here. What I can try to do maybe next week, I can ramp up a 2-hour cycle to pinpoint more the short-term behavior. So yes, this is my promise to you here. In the session next time, I will use a 2-hour and 1-hour chart on the global markets to analyze cycles, maybe to fine-tune the current bottom or correction period from shorter-term cycles. At least to get a clue how to do this on intraday, you need to have the data on your own. Okay, maybe current question. Based on your experience or statistics, Joan, which cycle phase lasts longer, the top arrival or the bottom arrival? You asked for Bitcoin. Maybe I will have a comment on crypto in a second. In general, because therefore I want to bring up your question here. Cycles not as clean symmetric as it looks like on a chart. So if we plot cycles, it looks like the time range from top to bottom is the same from bottom to top. That's the nature of clean symmetric cycles. But in nature, and especially in financial markets, you will see asymmetric cycles. And asymmetric, it means that the time from top to low and from low to top is not exactly the same. So therefore, these cycles will have a skew in real nature and also in the market. So therefore, you always have to keep in mind what we show on the platform is the theoretical symmetric cycle. In reality, you have a skew in these cycles. And your question now is related to what's the skew in the markets here. So, and in the financial markets in general, there's research out there that the upswing phase of a cycle and the duration of this phase of the cycle has a longer duration than the downswing phase. So the top arrival is extended in time to the right. So if you just compare it with the symmetric cycle, the topping period will last longer than the theoretical cycle shows you, and the downswing phase is shorter in regards to time. Therefore, it's more heavier. The amplitude of the down move is heavier. So, but also the time is shorter for the downswing. So from top to low, it's shorter. So you will see the real low in most cases coming in more early than the exact projected bottom of the theoretical cycle. John, I hope this helps to explain. So in general, topping lasts longer, bottoming phase come in more early as compared to the projected theoretical symmetric cycle. And this is for financial markets, and this is well researched if you see the skew of current financial markets, so you can do research on that. In cryptocurrency, it's not quite clear if we have the same skew, but I would count crypto markets in the same category as financial assets or financial class. So therefore, I would use the same skew assumptions also in the crypto market. So this gives you a feeling what you might see on the chart or what you might look out for in terms of the theoretical cycle we plot here. So, and I think this was a general important topic here. So yeah, that's it for the update on the main markets. And my promise here is where you can grab me next week. Let's move into intraday cycles next week, Monday. But before we stop here for today, I will do a short update on crypto and Bitcoin also, as I think you're interested in the update on Bitcoin. If you watched the presentations done here for a longer time, so I need to switch to the crypto chart here. So this is Bitcoin in US dollar, where we had this down move now, which started in November, or the topping period which come in October last year, lasted into November, and then now this downswing here into January. I think we showed in summer last year that this is a low and an expected upswing into the end of the year. So then this downswing is now following the projection, and I always try to told you that now the dominant cycle predicts or shows that we are in a bottoming phase. As always with cycles, we try to project points in time. We don't project amplitude of moves. So, and the nominal cycle is the 200-day nominal cycle, which is morphing around 10% plus minus around the 200-day cycle here. So if we just use current data, yeah, it looks like the 200-day cycle has shifted a little bit the length into a slightly longer cycle. So the 200 nominal day cycle might have shifted into a 230 something cycle. It's not as important here, the exact length here, which would expect the low to come in, yeah, from now. So if you, I mean, the bottoming period is not projected exactly at this point here. So the bottoming phase should be seen from a cycle perspective somewhere here when the cycle is in this turnaround phase here. This would be the point in time when you would expect the real price to turn in. And as I explained here, this also depends on the skew factor. So lows come in more early, which means more early means more on the left side, yeah, of the theoretical cycle, while tops often come in more to the right side, which you can see here. So the top is more extended here, but I mean that's just the theoretical skew. You also have the top here skewed to the right of the theoretical cycle. We don't have it really clear here for this low here. But therefore, we have now entered, and I think this is anyhow what I told you beginning of January, we have now entered the possible point in time where a low should be expected. However, this still means we can still see 2, 3, or 5% moving down from the amplitude, as we don't, or the cycles in this case, what we're doing here does not give us any price target here, and you should never catch a falling knife anyhow if you are in trading. So you need to add now your technical analysis to fine-tune the exact bottom here. From a timing perspective, I would say the next, let's say into March. So the next four weeks of February. So the next 4 weeks of February are a very good place to see a turnaround in the Bitcoin here. So that's the current situation if we just update it, and and that's why it is important also to always check how the cycle behaved. If you add some more data to the chart, that's what I always recommend you to do. I mean, I'm just showing here the very simple form of doing this analysis. So you should always keep in mind that cycle analysis requires more time to investigate more details on the analysis. But one thing is adding more data or shifting the amount of data you put into your analysis. So I'm now adding a little bit more data, and you see now here the nominal 200-day cycle is still there. So that's what I always told you here on this channel, looking on the cryptocurrencies. So if we add more data for our analysis, so we give it's more on averaged cycle lengths here. If we use more historical data, it's more averaging the cycle lengths over the whole period. If you don't use the full lengths, it's more in terms of the current lengths, because cycles morph, they are not static anyhow. So, but you can still see, so it's 210, so this would be a perfect point now for a low. So would also confirm the shift to the left on the 230-day cycles. And that's also a message here. It's not as important that you have the length exactly to the day. It's that if these two projections, they give us the same message here. So the 200-day cycle is bottoming now. The 230 cycle, which is just used if you skip a little bit data from the past, then it could extend during the next 4 weeks. So it looks like the cycle is getting a little bit longer here, but both tell us the same story. That's a different story we saw with the global financial markets, with the S&P and Nasdaq. So I also hope that these two pictures show you that there are always different views. So here in cryptocurrency, even the current and maybe the more average cycle give us the same message, where in the S&P, the cycle with a length of 170-day versus 150-day give us a different message. So there we need to add more into the mix. That's it for today. So I hope you've received a little bit an update on both markets, both cycles here. For sure, you need to bring in your additional perspective and knowledge to fine-tune this analysis, long-term, short-term. I think, as said now more than twice this time here, I will show you how to do this on intraday cycles, as the main markets now get very interesting to fine-tune the heavy swings we are seeing there. So therefore, that's it. Please also prepare yourself to have some intraday data ready for yourself, not for me, but for yourself. But then after next week, Monday, you can repeat the procedure, and I will show you how to upload, how to chart, how to do the cycle analysis here. So we will go through the whole process of bringing intraday data into the platform, showing it in the cycle analyzer, picking the right cycles intraday, making a projection intraday. So that's the outlook for next week, so that you can prepare your mind and your questions you want to discuss when doing this on intraday data sets. Okay, thanks for your time. I will have a quick look in the questions or the chat section. So Alan, please excuse that I have skipped your questions in the beginning, but for sure I will get back to these now. So can you show how to place the Baltic Dry Index into the cycle app? So that's a similar question in regards to intraday. So how have I done this? First of all, the Baltic Dry Index is not provided from the foundation as a data set. So same as for intraday, you need to download the Baltic Dry Index on your own. But this is a public index. So if you Google for the Baltic Dry Index, you will find the official website where you can also download the data from. So I just need to find the right starting point for you. So that's the starting point. The Baltic Dry Index, and the good thing is it's not as private as the stock market indices and futures. So the Baltic Dry Index is really public data. Download it, import it. I've done the same. I just need to check if I can show you the BDI. Yeah, I can show it on the platform. That's the same procedure as I did. So I did export it and imported this on my own. So therefore the Baltic Dry Index projection we did here, back in September, this is the exact data set where you can see, and this is the projection we made, and it crashed into exactly as shown here. But I did an upload on my own. So I know it's available on TradingView. You can export from TradingView. You can export the Baltic Dry Index from the public side there. And I hope that helps. Can you explain how the nominal cycle of, let's say, the S&P with the election cycle in the USA fits into it? Yeah, I mean, with the platform, we cannot show the election cycle, which is this kind of 4-year cycle based on pre and post election experiences, then averaged over the past elections, and then you get this kind of election cycle in the US, which is not digital signal processing in regards to the raw data, which is then the kind of election cycle or seasonal cycle based on the election procedure. So therefore, that's said up front, we cannot do this within this platform. So you now need to manually look on the election cycle, what happens pre-post major elections in the US. And then you should overlay it on your own with the cycle you see here. So that's what we cannot do with the digital signal processing, what is something you need to do on your own or in addition. And this is then the what I call what a cycle analyst needs to do. So you always need to have different views on the market. This is the dynamic cycle model we are talking here, which is based on current raw data sets and current cycles active in these data, which are dynamic. So they change over time. And these needs to be aligned within a static cycles model. So a static cycle model might be a seasonal cycle or an election cycle, which then give you a kind of complete picture where you can derive your activities. Okay. So additional questions. Okay. What CDS and FDS stand for? Yeah, you might see in the dashboards, or when I open these data sets from the index, different acronyms here in the upper right corner, which is the so-called index you're seeing here. And the ending with so CDS stands for all crypto data feeds have the ending of CDS. So C stands for crypto and DS stands for data set. So it's more an abbreviation to know which source to use in our data set. And the F stands for the FRED data set from the Federal Reserve Bank of St. Louis. They offer also public data sets in their so-called FRED API, and you can directly hook up to the Federal Reserve Bank of St. Louis from our cycle analyzer front end. And FDS is just the abbreviation that you want to pull data from the FRED API, where the crypto data set is you want to pull data from crypto. And then we often use Yahoo as a wrapper, and then you will see at the ending, so you need to use their main meaning, and I can make it a little bit larger here, and then that you use this ending here, which you can see then in the upper right chart. This means that we use a wrapper over the Yahoo data feed, which is used. So that's the reason why, and this gives you the ability to use different sources or to approach different sources, which is not our raw data, but it makes it more easy to access this public data, being it Federal Reserve Bank of St. Louis, being it Yahoo financial data feeds, or being it crypto data feeds, which are also public and available. So, Andre, I hope this helped you to explain the abbreviations we are using here. Yep, that's it for today. Ladies and gentlemen, let's wrap it up for today. I hope you have an idea of the main daily cycles we are doing here. Next week, we will deep dive into how to analyze intraday cycles here. And until this point in time, I hope you will have a very nice and great week. Stay safe, stay healthy. And let's talk about cycles next week. Same time, same place. Please like, subscribe, drop in your questions. I hope to see you next week here live on the channel. Bye.